Hello and welcome to FreightWaves Now, Friday edition. We are coming live to you here at the end of the week. We have made it through not one but 2 months of the winter. Happy March the 1st. We are turning a corner and we are going to be talking to you today about what is happening right now with the weather and what to expect over the weekend as we look slightly ahead of what is happening right now. And we're going to be talking with John Paul Hampstead, otherwise known as JP. He is our associate editor, and he's going to tell us why are brokers in their happy place right now. So, Nick, what is happening right now? Welcome aboard again.
Well, thank you very much, Chad. More snow out there. Yes, it snowed this morning in parts of the Northeast, but that's moving out of here.
Okay.
Yeah, from nation's capital up to near Philly. Even the beaches of South Jersey got a little bit of snow this morning. How about that? And but the bulk of the snow during the rest of the day and into tonight is moving through the northern plains, out of the Dakotas, over towards Minneapolis, northern Wisconsin. That'll hit the Chicagoland area later on tonight. And also out in the Rockies, there's going to be off and on heavy snow and a lot of wind out there too in the Colorado Rockies today. It doesn't look like much on there, but it is going to be coming down pretty hard in spots, and that'll happen off and on through most of the weekend. And the Rockies have actually seen a pretty active snow season this winter.
Oh, yeah.
But we haven't talked about it much because most of the focus has been out in the Sierra Nevada and Eastern California.
Buried right
now.
now.
And they're going to get another round of snow this weekend starting tonight. But we're going to go off precipitation. We're going to show the road conditions.
Yes. Oh, I love this feature.
There's some snow already falling, of course, across the Dakotas, heading into Minnesota. And this is a beautiful new feature that we have on sonar. And right up here in Fargo, North Dakota. I keep saying North Carolina. North Dakota, that's Fargo right there. Yeah. Right at the intersection of two interstates, 29 and 94. And if we click on this camera right here, it gives us a really good view of a lot of snow on the streets as well as the grass.
That is what is happening
That's what's happening right now near the intersection of those interstates. Up in that area. So that's right along the Minnesota state. I think the camera itself is actually in Minnesota, but it's right off the intersection of those two interstates. We can click on another camera, maybe over here towards just between Bismarck and Fargo. And so this is west on I-94, and that's between Fargo and Bismarck, which is the capital of North Dakota. And a lot of snow in the grassy areas, the medians, some snow on the road there. So this is a great new feature where you can look at what's happening right now with the weather, where there is impactful weather to travel and for truckers across the United States.
Great new feature, not great road conditions right now.
No, it's not. No. Of course, out west, you know, the ski resort owners and the skiers, the vacation, they're loving all the snow.
Yeah.
But it is bad for carriers and, of course, bad for the truckers. I-70 out through Colorado and I-25 is going to be really bad today and on through the weekend. So just be really careful.
Okay, and I was seeing just like a huge swath of precipitation down in the southeast. What is happening? It's just going to be wet.
Just wet.
Just wet. It's just becoming a tropical rainforest in the southeast. Nothing to worry about.
But some of the areas in the northeast that got hit this morning with sleet and snow, they will get more tonight.
Okay.
Mostly after the evening rush hour. So hopefully it won't interfere with the rides home around the Beltway in DC and along I-95. It'll mostly be after dark.
Okay, well, then, that's good. Thank you, Nick Austin.
You bet.
Goes without saying, be safe out there, right? And I love these new cool features we've got with the road conditions and the little flashing signals on the roadways. Now we have JP telling us why are brokers in their happy place right now, JP?
Well, it's because we've got surging volumes nationally that are pretty well distributed across the country. Yesterday, 82 of the 135 freight markets we've divided the country into experienced growing volumes. And that's pushed us up to about 1.9% year-over-year growth compared to March 1st, 2018.
Which is somewhat of a surprise if we think about it year over year, because we were constantly talking about how heated 2018 was, the first half of it.
Yeah, and so we've got, and the reason why brokers are in their happy place, especially compared to the first quarter of 2018, is because there's plenty of loose capacity. You know, we've been talking about, capacity is very loose. There's plenty of extra capacity ready to absorb that volume. So check out this chart. So here we are, we've spoken before about how OTVI, the outbound tender volume index for the United States, is indexed at 10,000 on March 1st, 2018.
Basis points.
You can see we are 1.9% up over last year's numbers, so that's great. But look at turndowns, tender rejections.
You've got it cross-compared, yes.
This is the other y-axis. This is the percentage of those loads being tendered by shippers to carriers that are being rejected for whatever reason. And you can see that we're down, at 7.28%.
And that is historic low, even though it's only a year's worth of data.
So what that means is there's a lot of loads out there in the marketplace, up year over year, yet capacity is still really easy to find. That means that brokers don't have to work very hard to do a deal, to make a transaction.
I see.
The freight is still flying off the boards. It's not tight. They're not having to work that hard. Prices are stable, probably on the way up. If you look at historical data, usually, in every year, 2015, 2016, 2017, 2018, spot rates usually bottom at some point in February. Now we're in March, so we're on the upswing. But this kind of zone right here, this loose capacity with lots of volume, that allows brokers to make a lot of money fairly easily.
We could draw like a happy face right here. This is the happy place.
This is the happy. That gap represents the broker's happy place. Now we think that will change, right?
Will it? It'll tighten.
So we think that spot rates will go up from where they are now. They've already gone up in a few markets. We're talking 5% increases over the course of February, from the beginning of February through yesterday. So, that's not a huge deal, but as spot rates come up, what that is, that's brokers' costs, right? That's what they're paying to carriers. And so as that comes up, that's going to compress margins.
So let me ask you,
right now, it's still, those prices are, we're waiting to see how much capacity how much capacity is still out there, how loose it still is, how much more volume can be absorbed before we see upward pressure on prices.
How happy are carriers with, like you say, that it seems like things are in balance, and that makes it easier for the brokers to procure the loads, secure, I guess. But carriers, from their point of view, is it just like, hey, they're getting the volume and it's easy for them to? Are they happy with the contract rates such as they are?
I think we're coming out of bid season. Contract freight is starting to be awarded. So I think the story for carriers here is they know that February and March aren't going to be, the spot rates aren't going to be high. To the extent that they have dedicated freight, to the extent that they have contracted freight, they're fine. The good news for them really is that with healthy volumes, year-over-year growth, they're at least keeping their trucks moving. The asset utilization shouldn't be a huge problem, and everyone's waiting for the kind of the May-June rally in prices where everyone makes their money.
Okay, so when you say that we're anticipating spot prices going up, you mean just progressively, like evolving towards through spring and towards summer, kind of natural, historic.
That's a natural seasonal sort of pattern. I would say that I wouldn't be as confident in an increase in spot prices if we didn't have healthy volumes. But at some point, capacity is going to hit a wall where we see tender rejections start coming up, and that's going to pull spot prices
as
up.
Volumes continue to go up.
Right.
Okay. So, and of course, as we know, and we sometimes try to educate some parts of our audience that don't understand all of these aspects of things, spot prices definitely influence contract prices.
Yeah, that's right.
Do you mind explaining briefly how that works?
Yeah, so, for the first quarter of 2019, excuse me, spot prices were anywhere from 20 to 27 cents per mile cheaper than contract prices. So that means that, in theory, a smaller mid-sized shipper could put their loads on the spot market, and even including a broker's 15% margin, could move their freight cheaper than with a contracted carrier. Larger carriers larger shippers, tend not to do that, just because it's so much more logistically complicated to put high volumes of stuff on spot and make sure they're all covered. It's kind of a pain, but
and I would think the broach of relationship, which is what we frequently talk about when carriers leave shippers to take advantage of the spot market in certain places.
Right.
Like part of the fallout for them not being able to have as high of utilization is that the shipper may be mad, right? So I guess from the shipper's point of view, does it work that way with carriers where they're like, well, I don't like you playing that game?
The thing about it is that normally the shipper is in the driver's seat. I would say, out of the past, right.
That's ironic, right?
But normally they're in control of pricing. They have the upper hand in freight markets for the majority. Of the past 10 years, probably 2 years when the carriers are really in control, including this past 18-month-long sort of upcycle that we were in.
Okay.
So, but one thing I have been hearing from brokers is that a lot of these smaller shippers are going toward 3-month bids and contracts versus 12-month. So
quarterly.
So they're anticipating that markets will change. They're keeping an eye on the spot market. They're trying to make sure that they are staying in communication with their carriers and 3PLs so that the price works for everyone and they can get their freight serviced.
Okay, wow. Well, thank you for that assessment, JP. And, that is what is happening right now as we anticipate going on. Things cycle down at this part of the week in the natural weekly cyclical cycle. Maybe that's redundant, but, within the shipping framework. And so happy place right there. Just think about, we're just putting a big smiley face there between the volumes and the very low tender rejections. So that is it for us this week. We come to you each and every business day. So stay tuned, for Monday at 4 o'clock. Thanks for tuning in. We are FreightWaves Now, and you can check us out on FreightWaves.com and on Twitter and on social media. Share the love. Thanks for tuning in, and we will see you next week. And in the meantime, don't worry, be happy.